So now moving to the investment sector of the market. This sector saw phenomenal activity last year, with over 4.5 billion of assets with a value of over 1 million in value traded, and a phenomenal 21 billion of loan sale activity. The buyers for both were quite different, with the Irish REITs and domestic institutions particularly active in the acquisition of assets, with a lot of the private equity investors more focused on loan sale activity. We would expect to see continued activity both in terms of loan sales and asset sales in 2015 as NAM and the various banks continue their process of deleveraging. We also expect to see a notable increase in the volume of secondary trades, which will bring more stock to the market. There is potential for yields to contract further over the next 12 months by up to at least 50 basis points and potentially more in the industrial sector of the market. One thing that we're likely to see in 2015 is a growing divergence between the various buyers in the market, both in terms of what they're looking for and their focus of activity. Some investors will not be able to justify current pricing and may decide to move to other geographies or other asset classes. Other investors will focus their attentions in 2015 on intensive asset management programs. Others will move up the risk curve into the development space or potentially into the provision of forward funding. There's no doubt that some investors who came into the market a number of years ago may start to leave now and go to other jurisdictions. However, we continue to see new entrants to the market, replacing that demand and appetite. One of the key trends in 2014 was a notable increase in the volume of retail investment being traded, and that's something that we would expect to see continuing again in 2015. We also expect to see investors moving into other non-mainstream sectors, such as hotel investment, student accommodation, and increasingly multi-family residential investment, which is an asset class in its own right at the moment. One of the key topics in 2015 will be the relative pricing of real estate. Certainly in a very low interest rate and low bond rate environment, real estate investment looks particularly attractive. But we need to also focus on the fundamentals and the bricks and mortar behind that real estate. So we're looking at a very, very active and busy year in the investment sector again in 2015.